Let me ask you something. If I gave you $5,000 today and said, invest it smartly, what would you do? Would you spend hours researching stocks? Would you try day trading? Or would you freeze, overwhelmed by too many choices? That's where robo-advisors come in. These are AI-powered platforms that manage your money automatically, like having a digital financial advisor in your pocket. But here's the thing. Not all robo-advisors are created equal. Some are cheap, some are expensive. Some give you tons of customization, while others keep it super simple. So in today's Showdown, I'm breaking down the best AI investing platforms in 2025, their pros, their cons, and which one might actually be right for you. And don't worry, I'm going to explain in a way that's clear, real, and human. No jargon overload. Just straight talk. Ready? Let's dive in. What exactly is a robo-advisor? Before we compare them, let's make sure we're on the same page. A robo-advisor is basically a digital investing platform that uses algorithms and AI to build and manage your portfolio. Instead of hiring a traditional financial advisor who charges you 1% of your money every year, you let the robo-advisor do the heavy lifting, usually for a fraction of the cost. Here's what they typically do. Ask you a few questions about your goals, risk tolerance, and timeline. Automatically invest your money into ETFs or index funds that match your profile. Rebalance your portfolio when things drift out of line. Sometimes, think of it like autopilot for your investments. The real question is, which autopilot do you trust with your money? Why 2025 is different. Now, here's why this conversation matters more in 2025 than ever before. Artificial intelligence has leveled up. What used to be basic rebalancing has turned into predictive insights, personalization, and AI-driven portfolio tweaks. Some platforms are even integrating with your entire financial life, budgeting apps, retirement accounts, even real estate, so the AI has a full picture of your money. That means choosing the right robo-advisor today could actually impact how fast you build wealth tomorrow. All right, let's get into the contenders. 1. Betterment. Let's start with one of the OGs, Betterment. Betterment has been around for over a decade, and it's known for being super user-friendly. If you're brand new to investing, Betterment feels like a warm welcome. Key features: automated portfolio management with ETFs, tax loss harvesting, goal-based investing, retirement, house down payment, emergency fund, optional human advisors for an extra fee. Fees: 0.25% annually for the digital plan, or 0.4% if you want premium access with human advisors. Here's the good part. Betterment makes investing ridiculously easy. You answer a few questions, deposit your money, and boom, you're invested. But here's the catch. If you're someone who likes a lot of control, Betterment might feel a little too hands-off. Verdict: best for beginners who want a set-it-and-forget-it approach. 2. Wealthfront. Next up, Wealthfront, Betterment's biggest rival. Wealthfront is also beginner-friendly, but it gives you more flexibility. Key features: automated ETF portfolios, direct indexing for larger accounts, tax loss harvesting, a built-in financial planning tool that helps you track all your accounts in one place, plus a pretty advanced cash account that earns decent interest. Fees: also 0.25% annually. What sets Wealthfront apart is its planning software. Imagine logging into one dashboard and seeing your checking, savings, investments, loans, and retirement accounts all sync together. It feels like a bird's-eye view of your money, and the AI gives personalized nudges. For example, it might tell you, hey, you could lower your taxes by moving this money over here. Verdict: great for people who want a balance of simplicity and smarter planning tools. 3. Vanguard Digital Advisor. Now let's talk about a big name, Vanguard. If you've ever heard of index funds, you've heard of Vanguard. They're the kings of low-cost investing. Their robo-advisor, Vanguard Digital Advisor, is basically an extension of that philosophy. Key features: focus on Vanguard ETFs with rock-bottom expense ratios, retirement planning tools, goal tracking, optional upgrade to Vanguard Personal Advisor Services if you want human help. Fees: around 0.15% annually, plus the fund fees. That makes it one of the cheapest robo-advisors out there. Here's the thing with Vanguard. It's not flashy. It doesn't have all the bells and whistles of Wealthfront or Betterment. But if you want reliability, trust, and super low fees, Vanguard is a safe bet. Verdict: perfect for long-term investors who believe in index funds and want to minimize costs. 4. Schwab Intelligent Portfolios. All right, let's bring in another heavyweight, Charles Schwab. Schwab Intelligent Portfolios has one unique selling point: no advisory fees. Yep, you heard that right. They don't charge the 0.25% management fee like most robo-advisors. Key features: automated portfolios of ETFs, automatic rebalancing, tax loss harvesting on higher accounts, access to Schwab's huge financial ecosystem. Catch: they require a higher minimum balance, and they tend to keep a chunk of your money in cash, which some investors don't love because cash doesn't grow as fast as stocks or bonds. But if you're already a Schwab customer, having everything under one roof is super convenient. Verdict: great if you hate paying fees and don't mind a little extra cash drag in your account. 5. New AI players: M1 Finance, Q.ai, etc. Now here's where things get interesting. In 2025, we're seeing a wave of next-gen AI investing platforms. Names like M1 Finance, Q.ai, Titan, and even apps backed by major AI companies are stepping into the ring. M1 Finance lets you build custom portfolios. They call them pies, and the AI helps rebalance automatically. It's like a hybrid between DIY investing and robo-advising. Q.ai is more experimental. It uses AI to actively shift portfolios based on market signals, almost like having a hedge fund manager in your pocket. Titan mixes robo-advising with active management, giving you a more hands-on investment strategy. These newer platforms aren't for everyone. They can be riskier, but if you want cutting-edge AI-driven strategies, they're worth exploring. How to choose the right one? Okay, so with all these options, how do you actually choose? Here's a simple framework. If you're a complete beginner, Betterment. If you want smart planning tools, Wealthfront. If you're a low-cost, index fund believer, Vanguard. If you hate fees and want everything in one place, Schwab. If you're curious about cutting-edge AI, M1, Q.ai, or Titan. At the end of the day, the best robo-advisor isn't universal. It's the one that matches your goals, your risk tolerance, and your personality. So there you have it, the 2025 Robo-Advisor Showdown. Whether you're looking for simplicity, advanced tools, rock-bottom fees, or futuristic AI, there's a platform out there for you. But remember this: robo-advisors aren't magic money machines. They're just tools. The real magic comes from starting early, staying consistent, and letting time do its work. So, which one do you think you'll try? Drop your thoughts in the comments. I'd love to hear which robo-advisor you're leaning toward. And if you found this helpful, don't forget to hit that like button and subscribe, because we've got way more financial deep dives coming your way. Until next time, invest smart, stay consistent, and keep building your future.